Hey everybody, welcome to Trading Capital. It's April 25th. Let's jump right into gold and precious metals. Clear technical damage done on gold. We have now officially got a close below 1900. And not only is this closing, why it's so significant is if we look at the charts here, okay, just the specific period here, this big run up in gold, which was the fear trade spike due to the war. And then you had this massive collapse, and you've had this consolidation. You had this bullish attempt to try to break out again, but clearly failed. And the beautiful thing is that we've been calling for this bear flag pattern to break lower, and it finally triggered today. And the reason why these resistance and support, well, what was resistance becomes support. So the reasons why these two support levels are so critical, especially this lower one, is because all of this chop here, you had never closed below this support level until today. You completely had a massive sell-off in gold, down 1.67%. And the difference between this sell-off and previous sell-offs is, look at the size of these sell-offs. It got bought right back up. This one got bought right back up. And now, with the amount of selling and immense pressure there is in the precious metals market, there was no more bulls to buy this market back up. And you can argue, well, you don't have to argue, this is the lowest closing price since you had this impulse move to the upside, which started your big rip-roaring rally. And the beautiful thing is that we're looking to reload here. We've been patient, very patient with gold and silver, and we still in the camp that it comes back to this longer term trend line before it broke out. You see this impulse bar here. And it should line up specifically with how the price action in previous cycles are lining up, where you have this double top scenario with a weekly topping tail on the chart. And then if you had to scroll back, a few decades, in my previous videos I go over that. That's a very similar cycle pattern that gold seems to be following. And I ultimately think there's downside to here. I think you see downside to this blue trend line, maybe a little bit above. We'll start looking to potentially accumulate a small position around this area, this 1869, and then anywhere on this trend line. But anywhere in this zone here, I think is going to be a tremendous buy opportunity for gold, at least to start accumulating gold for the longer term. And the wild thing is that why people should have expected a fall in gold is for one simple reason. We know the Federal Reserve is tightening, and tightening for gold is never a good thing. Loose economic policy in the form of printing and low artificial interest rates is bullish for gold. But when the Federal Reserve starts to tighten policy, that's the bearish indicator. So despite you still have the fear trade aspect of Russia, Ukraine, other currencies collapsing, around Pakistan, Ukraine, etc. Nothing trumps what the biggest central bank in the world is doing, and that's the Federal Reserve. You have to be aware pretty much month to month what they are doing, because they ultimately dictate and have the largest monetary policy that affects the global trade. Okay? So with the fact that they're tightening and they're now slowly starting to reduce their balance sheet, raise interest rates, that puts pressure on gold. Now, gold will eventually sniff out when the Federal Reserve can no longer honor their tightening of monetary policy. But until we start seeing those signals, gold is ultimately heading lower. And we've been telling people, we've been banging at the wall here to say that gold is going lower, We shorted Newmont, we were shorting silver as well, and this is just beautiful to see. Even though I'm a long-term bull of gold, I hold physical bullion. I will always hold physical bullion as an insurance policy. The fact that now we are getting to levels which they're not quite there yet, but we're starting to now test those levels that we can look to start accumulating a rather large swing position. And I love accumulating swing positions in gold because it not only backstops your portfolio from volatility, but it's a swing position that I don't really ever fear of holding. sure, gold can go, lower than what people expect, but eventually, if you know the overall macro trend where our central banks will always print more money to fuel the next bubble and to get out of their debt loads and increase the inflation to wipe away some of their debt responsibilities and obligations, gold will always have the fundamental backdrop. As long as the fiat system is in place, there's always going to be bullish factors for gold, in my opinion. But we'll be looking to start a small position potentially at this 1869 mark. If it has a straight sell-off shot into there, I'll definitely add. But if it starts to consolidate bearishly above that, then I'm going to look for the lower target. We could potentially see a small retrace bounce up to your previous support line here. So don't be surprised if we start testing the top of this yellow channel again with potentially a bounce all the way up to there. Again, I don't think you're going to recapture this parallel channel. Now that you've closed below, look for confirmation candle, which we could potentially get tomorrow if gold gets a big sell-off. But nonetheless, gold is starting to have a beautiful bear flag pattern that was triggered. Obviously, once you take out these major pivots, then I think it's really not a question in my mind that you see gold heading down to this blue downsloping trend line. Let's take a look at silver. Silver is really in the same boat as gold. Had a massive sell-off. You can see you finally broke this parallel channel. Now you can recapture. Silver's a little more oversold than gold in my opinion. You've had a 1, 2, 3, 4, 5 daily surge to a low here. And potentially you are very close to this downsloping trend line. We didn't start at a position yet because gold hasn't hit our level. So if we believe gold is going to go lower, then we are certainly thinking silver is going to go lower. And if gold hits that blue trend line, it could really put into question that silver has to come down to this triple bottom zone. And again, we touched on this previous videos a couple weeks ago that it would match up perfectly with how the gold cycle has gone for silver to see a triple bottom. Because silver has a triple bottom here or a double bottom here, and if it flushed down to this green trend line again at level of support, it would create that triple bottom. Just like we saw in gold, let me flip back to the gold chart. Gold has a clear triple bottom. 1, 2, 3 triple bottom. So the metals like to move in symmetry, and that's why I think if gold falls another, $50 to $80 or $80 an ounce, it could flush silver down to these low levels here. But that's going to be a big flush and a great buying opportunity in my opinion. I was very close to executing a buy order for silver as we came into this trend line, but we did not hit the trend line to a T, and maybe I might miss a bit of a trade, but I certainly don't think we will. For silver, you could see a retrace back up to say the center point of this trend line before rolling over again, but ultimately I do think there's more downside for silver, and I'm just being patient. We've been patient with gold. We've had our levels. We bought down here. We sold pretty much near the peak. And now we're looking to reestablish a good core position at a great entry level. And I certainly do think gold is going to flush down here. Gold could certainly even go lower than that channel. It may catch and surprise a lot of people. But usually when you have this all of a sudden blow off top move, the patterns like to basically come back down and negate this whole move and start fresh, because this was a parabolic rise to the upside that happened way too quickly. If you have been a gold investor or a bullion investor and you saw this type of pattern, you may have been excited that gold is going up so fast, but myself as a technical analyst, and not only a technical analyst but a gold bull, a gold lover, I love the precious metals, I was not happy with the parabolic move that gold was doing, especially since it failed to negate the previous all-time high. So now not only do you have a failed breakout, but you had this parabolic move that needs to be cleansed. You have this minor intermediate bear flag pattern, and if we simply did a Fibonacci measurement from the high to that low to basically your high there, it takes gold down to the 1815 level, the max measure move, which just so happens to coincide with our blue downsloping trend line. So just be patient on gold. There is going to be some buyers probably around these pivots here, maybe at this pivot here as well. But be prepared for it to flush down to this blue line. And if it starts flushing anything lower, we're going to be buying, buying, buying. Hopefully this analysis helps. We will see how the price action unfolds. With gold rotating down, it means that the markets are more in a risk off mode, so the big cap tech should do a little bit better. I just want to take a look to see what utilities did today, as I had not checked that out yet. There you go. So this aligns. Utilities are more of a risk on asset. When there's risk in the market, utilities tend to do well because they're the staples. People need to heat their home. People need to, buy energy for their cars, and so on and so forth. So utilities tend to do well when there is tremendous risk in the market. Simply looking at the utility chart here, there's probably an interesting trend line that we just hit today. Look at that bounce. Pivot high to pivot high to another pivot high to another pivot high, and look at that technical bounce. I'm a little disappointed. I could have day traded this one, but you would have netted a beautiful, beautiful day trade profit. But nonetheless, you can't be analyzing all the charts all at once. But utilities are also lining up with the fact that there's more risk off sentiment starting to creep in the market, which is really interesting because earnings typically scare people, especially when we've been, especially when the markets are down on the year, especially when companies like Netflix, PayPal, a lot of these bigger cap tech companies are being shredded. So it's really interesting to start seeing that there's more risk off sentiment in the market. That could change. Utilities were certainly overdone. Let's see if it's a weekly topping tail. No, there's no real topping tail there. So again, utilities had a nasty sell, but they were certainly overdone. It'll be interesting to see if these continue to resume its upside bullish momentum. I'm probably in the camp that utilities do come back down to this level here, which will coincide with the 50-day before it could potentially start making higher highs. But again, noticing how the risk and the sentiment is shifting going into earnings, that could change on a dime. If one of the big cap tech companies start reporting terrible forward guidance or terrible earnings, then look out below. That risk could creep into the market very